Okay. I'm trying to.
Hold on.
Okay, we're going live now.
Oh, we're live now?
Yeah, I think we are.
Okay.
Good evening, everyone. Can you hear me? Can you see Rafi and I?
Everyone can hear me?
Okay. Yeah. Can someone say I've got the can someone tell me if you can hear me? Yeah, great. So Monaco 64 here. Today I have the pleasure of doing a live stream with a man that you guys probably have seen already here. Since November, we've been doing some interviews. Rafi Farber from the Endgame Investor. You should check him out on Seeking Alpha. He does regular, very good research. I like his views. He's a free market Austrian School of Economics, small government guy. And he's been writing a lot about the backwardation in the silver market. He's going to hopefully explain to you what backwardation is, and especially with what's going on in silver right now. So Rafi, do you want to tell the viewers a little bit about yourself, and then we can go into backwardation, the silver market, maybe talk about some other things?
Yeah, about myself. I live in Israel. We've been on lockdown here for a month. I think they're extending it by another 2 weeks. So I've had nothing to do but look at the markets and see the craziness, and it's gotten me hyper focused. My service is the Endgame Investor. You can find it by just Googling Endgame Investor, and we have a daily market commentary, and I do a little bit more on the weekends. And especially in these very volatile times when wild swings in every direction can get you, pumped to cloud nine or despairing. It's more important than ever to keep a level mind, to keep a level emotions, and I try to guide myself and my subscribers through that as best I can. And I think we're doing a good job, and it's nerve-wracking and it's fun at the same time.
Yeah. By the way, I thank you, Typical Brian, for the super chat. Typical Brian says, I love gold. So we'll talk about gold as well today. Yes, gold has been hit hard as well. So could you explain to the viewers backwardation? And you've been noticing, like in the last few months, how other commodities are going into backwardation, but gold and silver hadn't. And like today you wrote about how silver is going on and off backwardation and what that could mean.
Yeah, well, I've talked about it a few times here, but I'm going to try to take it from a different angle this time. It's tempting to look at market numbers as some kind of like code or voodoo, that if you see it, like, we try to do that with charts. If we see a certain shape, and then it means bullish. If we see a different shape, it means bearish. Or if we see numbers going in one direction, it's good. If we see another numbers and going a different direction, it's bad. But I'm going to try to bring it down to earth in just simple logical terms, right? So just in terms of the definition of it, backwardation means that the price of something for delivery sooner is more expensive than the price for that delivery later. That shouldn't be in normal circumstances, because if you're going to lock in a price for a later delivery of something, you should have to pay for the storage fees and the insurance and whatever it is that is required to keep that commodity, okay. But in backwardation, you have the situation where the price for that commodity is more expensive in the present than in the future. And the only way that happens in logical terms is if there's a shortage of a commodity, and therefore there's demand for it now because people need it. If there's a shortage of wheat, people are going to need wheat now to eat, and will pay less for it later because they'll have to wait to eat it. Whereas if there's an abundance of wheat, then you'll pay more for it later to lock in the price, and you'll pay less for it in the present. Now with gold and silver, that should never happen, because when they're just like there can't be if we speak of the dollar as the money, you can't really have a shortage of money. So there can't be a shortage of dollars. There's no such thing as a shortage of dollars, because when there is a shortage of dollars, what happens is that prices just go down. That's how you conserve dollars. You lower the price for whatever it is that you're selling, and that takes care of the supply problem for dollars. So if gold and silver as money should never be in backwardation. The natural response to a shortage of silver should be prices in silver terms just go down. But since silver is not the direct money anymore and it's the dollar, then silver can go into backwardation. Now it's very rare, but what's happening actually is if you just picture the futures market for anything really, there's a paper future market for almost every commodity, wheat, soybeans, oil, whatever. And you ask, like, what is the purpose of this thing? What does it do? So really what it does is it helps level out prices. So there's a risk of digging up oil. There's a risk of growing wheat, because the costs to farm it and produce it could be higher than the future demand to buy it. And if you're a wheat producer, you need to protect yourself against that, so that you can know how much you're going to sell your wheat for, therefore how much you can spend on producing it, so you can stay consistently profitable. You need that paper market. So there is a connection between all paper markets and all physical markets. The paper markets set the price, and liquidity is added by traders who are buying and selling these things, who have no intention of taking delivery of wheat or soybeans or whatever. But you need that paper market to set the price. Now there's always a difference in any market between the paper price of that thing and the spot market with the futures, which are necessary for setting the price for the producers. There's a difference between that price and the actual price of the wheat that you're buying in a supermarket. There's always a premium, right? So when that premium gets too high, when it gets out of whack, then what happens is there's an arbitrage. This is how backwardation works. There's an arbitrage between the physical price of whatever it is, whether we're talking about gold, silver, or wheat, or oats, doesn't matter, and the paper price. So let's say on the physical market, the physical silver market now, right? You're seeing coins, 1 ounce coins sell for on AppMex, I just checked, is about maybe $40, $41, $42 if you're paying with a credit card. I mean, and if you're buying I did the calculations. If you're buying like up to 19 coins, 19 ounces for a retail, let's say a guy with a few $1,000 or a few $100 wants to buy some silver, and he's going to pay $41, $42 a coin, but the paper price is like 26, 27. So what happens there is that there's going to be somebody who's going to make that profit, right? If you buy paper silver on the comex and then you call for it for delivery or physical delivery, you're going to have that silver, and you're going to be able to sell it into the market for closer towards $41, $42, which is what the retailers are selling it for. And you want to make that money. That money is there. You're, as an economic interest, you're going to want to lock in that profit. So what you're going to do is you're going to buy the front end futures for for quicker delivery, because you want to lock those profits in now. You want some of that premium for yourself. So what's going to happen is that the front contracts are going to become more expensive, and the futures contracts, going later into the year, they're going to get cheaper. So you're going to see a smaller spread between the front contracts and the future contracts. And eventually, if the premium gets too high or it stays too consistent or too persistent, then you're going to have backwardation. The demand to bridge that gap between the paper price and the physical price is going to be so high that the bids for those contracts on the front end are going to get really high, and then you're going to end up with backwardation. So that's the economic explanation for why backwardation is so bullish for the price, and we can see that in the prices for physical silver, because they couldn't even go high enough. Everything's cleared out. Most of the things that the coins that are being sold by the retailers are pre-sales. They don't even have the inventory yet. So, I mean, the premiums are still way out of control. And the way that you get the premiums down is you push the paper price up. That's what's going to happen. So I did some historical research. Nothing too complicated. I Googled, silver backwardation. So checking when's the last time this thing happened, and the last time it happened was September 2015, which is within 2 or 3 months of the bear market bottom in gold, and it happened in it also happened in March 2020. There was brief silver backwardation along with brief gold backwardation.
Yeah,
Because
and silver
yeah,
in March went down to 11. I remember
right.
that day really well. I was able to buy a few coins.
Yeah. I remember that day too. I was having heart palpitations, but I knew, I knew like this is the time to buy. It was the hardest buys I've ever done, but I did it. And just trying to cycle through the logic again and again. I couldn't think of a logical reason not to buy. I mean, it's not going to go down to 8, 7, 6. Like, you buy on those days, even though it's hard. So it happened in March 2020, and we know what's happened to silver since March 2020. It happened in September 2015. We know it happened from 2015. If you've been in this market for a while, 2015 was the bottom. The late 2015 was around the bottom in gold, and from there silver went to I don't remember exactly the numbers, maybe $15 to something like closer to 30. I don't remember the exact numbers. Maybe you can look them up and correct me later. But there was also backwardation in February 2011. The silver was in backwardation, I think, for a month or maybe 2 months, something like that. And from February 2011 to May 2011, we know what happened there. Silver went up to $50. So what's happened when the price goes up? That's really futures buyers that are coming into the paper market, getting the physical delivered and bridging the gap with the physical. So the paper price meets the physical, and the premiums go back to normal. So that's what's going to happen this time. It's going to take some time to filter through the system. Exactly how much time, I don't know, but February to May 2011 didn't take long. September 2015 to June took less than a year. In March there was backwardation. It took from March to August, a few months. The different thing about this backwardation is that silver is not at a low. It's not like March 2020 where we crashed down to $11 or something. It's not that's not what happened. We're at 26. It's pretty respectable. It's not a tremendous low or anything to freak anybody out, unless you bought at 30 and now you're trying to run away. But if this is backwardation at 26, and the backwardation in February 2011, we had it maybe 15 or 16, and went to 50. What happens now? How many months? It's gonna take a few months, but we're gonna get there. We're gonna get, I think, to around 50, maybe even higher in a few months, sometime this year. It looks like, judging by what's been happening in the physical markets.
Yeah. One of the viewers is asking, I think I might know the answer, but maybe you want to chime in. Why, if JP Morgan, how can I say, manipulates the paper price, not only of silver, but of gold, why do they hold so much physical silver? Have you got an opinion on that?
Why do they hold physical silver? So
Yeah.
that they can sell it and short it.
Yeah, that's what I think as well, because with gold, a lot of the central banks hold gold, but I think only the Russian central bank has gold, has silver reserves. So JP Morgan is acting on behalf of the central banks here. That's why they have the silver. So I think they lease it out to the other dealers, so the other dealers can short the paper. And why don't the central banks buy the silver themselves instead of JP Morgan buying the silver? Well, because I don't think they want the public to know that central banks have silver, because that would wake people up. Do you agree with that, Rafi?
I haven't really thought about it that much. I just think it's they own some gold, but there's no need for them to own silver if they own gold so much. Silver is more of the common man's gold, and central banks don't really need it. That's what I think. But this really isn't about. It's not about silver. It's about the dollar. It's more about the dollar. It's the price of the dollar that's being manipulated, not the price of silver. But you got to look at it that way, because the Fed's asset is the dollar, and banks' asset, JP Morgan's asset, really is the dollar.
Yeah,
If the dot, if
Federal Reserve note, I guess, for some,
yeah,
a lot of people don't see
right. Sorry.
but I use the term interchangeably as well. But I know Lord Humongous, one of our viewers, he gets kind of upset about that.
Okay, okay. Well, and just so you know, I know the origin of the term dollar. You know,
Yeah,
Joachim style and the
yeah.
Thaler, and okay, I give you that. But sometimes I'm loose with my terminology.
Yeah.
But I'm ideologically I'm with you. Don't worry about it.
So we're getting a lot of questions here as well about the move in gold today. I'm gonna give my 2 cents about why gold has gone down so much. Uh, well, one thing is that I think the selling in silver has been exhausted, and they still want to keep it down. So what do? They go and sell the paper gold to keep the silver down, because you've seen usually if gold today was down like over about 2%, silver should be down like 5 or 6, but it's only down
Mhm.
about 2.5. So I think it seems to me that silver might be bottoming here, the paper price. The other thing I think is happening, because a lot of people think of gold manipulation as just something the Fed does, but I think the Bank of England does a lot of it. They're a huge part of the LBMA, and today they published their quarterly report on inflation, and they actually said that they're thinking now of instituting negative interest rates in the UK within the next 6 months. And the other thing they said is that they plan to keep their base rate at 0.1, which is basically zero, for at least another 3 years. And prior to that coming out, uh, gold and silver were hammered here in the morning in London. And all of a sudden the pound picked up as well. So you had the central bank here saying they're thinking very strongly of having negative rates. You have them saying they're going to keep their base rate at zero for another 3 years. Uh, and the price of gold goes down, and then the pound goes up, which is a double whammy. It seems really weird. So that's my view. What's your view, Rafi, on the gold move?
Yeah, this I saw a tweet from Gregory Mannarino last night. It was retweeted by somebody, and he was saying that he heard rumors that J.P. Morgan was going to do something to gold.
I
In
thought it was
in a short.
silver, he said, no?
Maybe it was silver. Maybe he said. I
Yeah,
mean, the markets are interchangeable. They're related.
yeah.
So I mean, whatever exactly. So he said that J.P. Morgan was gonna be up to something. The question that I can't answer, and that's been bugging me for a long time. Maybe you have some input on this. Is that I can't really tell if the central banks and the banking cartel, if they believe their own Keynesianism so deeply that they really buy it, or if there are people that know what they're doing and understand that if gold and that if gold and silver go really high, then if they really understand that their currencies are going to collapse. I don't know what they really believe, and if there's some kind of intelligence behind this, or if they really believe in their Keynesian money printing propaganda. It's a really difficult question.
Yeah, you would think that these guys would be smart. It's tough question. I personally think, yeah, they've been themselves brainwashed so much uh, through their education. I don't think that people have been taught how the monetary system really works since the 1930s. They stopped teaching about, the origin of money, the gold and silver. So, and it seems to me that everyone's on the same wavelength. The universities don't teach about monetary history. The only thing they talk about gold is they say, oh, Nixon closed the gold window, but there's no looking deep to see why he closed the gold window. And I also think a lot of policymakers, people on Wall Street, economists, they've been they haven't read the Austrian school. They haven't read Rothbard, who wrote about the Great Depression. I have the book about the Great Depression. They've read Bernanke and Milton Friedman about the Depression, that it was the fault of gold. They've read that it was the fault of gold as well, that the UK went off the gold standard, and the US. But they never say that it was the fault of the bankers that issued too many promises to pay gold. That was the reason for the Great Depression and the system breaking down. So I think they're really ignorant, and I think there's a little bit of hubris as well, that they can manage everything, and they've succeeded. So I would say since Paul Volcker in 1980, there's been a lot of how can I say, big crises, but they've been able to come back from it. It's always, more and more credit created, more money printing or debt created, but it always been more and more they've had to do. It's like a drug addict. The hits need to get bigger and bigger to have an effect. I personally think we're very close to a crisis where it won't work, and that will be the end. And I don't think they realize that. I think the other thing they think is that because Japan has had zero or negative rates for almost 20 years now, because they've got over 200% of GDP, they think that everyone can do that. Let's say in the West, they think the US can go like Japan. So yeah, that's my view on that.
Mm-hmm. Well, I don't think the U.S. can't be like Japan. Japan are savers.
That's right.
They have the samurai culture. They still have this hardworking culture, whereas America doesn't have that anymore. America has a leeching culture, unfortunately, and they rely on foreign imports. And once the dollar goes down, they're not going to be able to have those imports, and prices are going to go through the roof, and that'll be the end of the story.
We're going to check the Lord Humongous is asking where the gold silver ratio is. We're at 68, Lord Humongous. I'm going to try to bring up a chart for you, or we can share it if you bear with me. Yeah, I've said that I think the level of 70 is going to be a resistance in that ratio. Let's bring it up again. So here we are. Bear with me. So let's share. So there you go. There's the gold silver ratio. I think it was last Friday I said that if we broke through that 70 level, 69, we could see that ratio accelerate, and it did. But now it's picked back up, and we're at 68 there. You guys can see. So I think, that the bottoms we had there since last year, that's going to be a big resistance, which means basically that I think it's a good level if you're looking to sell gold and buy silver as a trade, or maybe you don't have enough physical silver, but you have some physical gold and you want to like swap, you can do that. I think personally, I try not to play that ratio because it's probably too expensive here in the UK because of the VAT on silver, and also even the premiums, even in the States. What I heard is that because I was on this live chat with this coin dealer from Houston a few days ago, and someone asked him about the gold silver ratio, and he said that what usually happens in the US at coin dealers, they will bid you the spot minus a discount for whatever you're selling, and then whatever you're buying in the ratio, they'll put a premium on. So that's why I personally don't really. I just look at the gold silver ratio in order to see the direction for the markets. Historically, gold silver ratio going down means that silver outperforming means it's a good sign for the bull market in precious metals. And I still think that chart is pointing to that. And I think that's why the bullion banks are so desperate, and you might think, oh, they don't look at that ratio. Well, I've got a story. When I started out in Switzerland, I started out my career really in finance. It was for a small investment company, portfolio manager, and they had a guy who was the dealer. So let's say my boss, it was a small company. So my boss was changing the portfolio for the clients, or he wanted to put a trade on. He would give Carlos, that was his name, all the trades, and he would be calling the brokers, the banks, and he was really experienced. He used to trade foreign exchange for UBS in Zurich, and he used to do the dollar versus mark, which was the big cross. And then he used to bring me and some of the other girls that worked in the firm. We were in the back office to teach us about trading. And he told us about the gold silver ratio. And I was really surprised. And that's something they trade on the foreign exchange in the banks. So, yeah, they're looking closely at that. And I think it's one of the reasons they came in and try to stop silver. I don't think they will be successful.
The fact that coin dealers have been, run out of inventory pretty much all over the world means that they're not successful. I mean, if the physical market is the real market for silver. I mean, that's where the demand is, because people want the coins. I mean, the paper is just to set the price of the physical. If people went on Sunday, on that weekend, to go online and like look for orders and clear out the inventory, that's what they're demanding. It was a flash in the pan, but it cleared out the entire market. I mean, imagine for a second, right? That people that everyone started buying wheat, right? And then all the supermarkets were cleared out. That would be a pandemonium. I mean, there'd be no food. So meaning that the wheat markets and the agriculture markets, the paper markets, they're never this out of whack where one day of demand for wheat can clear out all the supermarkets and all that. That's crazy. I mean, it's dangerous. But the fact that for one day people suddenly realize that they need silver. I mean, it was enough. And I'm not talking about like going and clicking a buy order for SLV or PSLV or buying a futures. They went to a dealer and they bought coins. I mean, that's something that you don't just sell a day later. You can't buy and sell silver every day unless you're part of the market, unless you're part of the retail market and you have an inventory. I mean, when you go and buy it, you're going to hold it, at least for a few years. So that's the real demand. And the paper is going to meet that real demand, or else there's going to be no silver anywhere.
Someone's got a question here, John H. You might be able to answer that. I don't follow PSLV that much. He says, will PSLV stop selling shares if they can't source physical argentum or silver?
Will they stop? I tend to trust Eric Sprott. He's actually one of my subscribers on the Endgame Investor, or maybe he follows me on Australia. He mentioned me a few times when I wrote about silver making a big move. I think sometime in July I wrote an article. But I trust Sprott to do what he says he's going to do. And PSLV is different from SLV. SLV is supposed to function as if the price of silver goes too high. Then in order to keep SLV in line with the futures market, they have to issue more shares so that there's no squeeze on the SLV shares, and then there could be a premium of SLV on the futures, and they try to track it. So what they do is they buy silver and then they issue more shares that are supposedly backed by the silver. Maybe they are, maybe they aren't. I don't want to get into a discussion on that right now.
Yeah.
But PSLV is different. Sprott tries to buy low and sell high. He sells the shares short, and then once he sells them in, he covers it with silver, at some point in the future, so that he can sort of make money for the fund and beat the silver price by some kind of percentage. I think that's how it's a little bit different. So PSLV doesn't track silver as perfectly as SLV, or at least the futures price as perfectly as SLV does. But if SLV is caught double counting, then the fund could really lose value relative to the silver price. Whereas I think PSLV would stay intact in dollar terms. But in terms of getting physical silver, you're not going to be able to unless you're an accredited investor and you have millions of dollars invested in it.
What about PSLV? How many ounces per share are there?
I don't know.
And I heard someone say that you need to have at least $100,000 worth of PSLV to get delivery. Is that true? Or
It's going to be something around there. The basket. I think the basket of SLV is about 50,000 shares.
I see. I see.
So I think a basket of PSLV it'd be something similar to that. But not only that, it's like you can't just amass 50,000 shares and then call up Sprott and say, I want my silver. I mean, you have to. There's a whole bunch of papers you got to sign. You have to have, I don't know, CPA or whatever. All these letters, degrees to your name. It's not easy to do. I mean, there was an ETF for gold, which was the AAAU, but Goldman Sachs bought it. So I think the only ETF that is deliverable in physical gold now is OUNZ. So that's the least dangerous precious metals ETF that's out there.
Someone's asking here, can SLV use LBMA vault inventory as stock for flows into SLV? Yeah, I think they do use the LBMA inventory, but it's unallocated. So they will use inventory that, let's say, the bullion banks are trading unallocated. So it will be like all double counted. As I've said, I think SLV or PSLV, hearing what Rafi just said, that it's not that easy, that simple to get delivery. I would stick to those only if you want to trade, if you want to track the price. But if you really want to own silver, I think you have to go physical. Do you agree with that, Rafi?
Yeah. There is value to tracking the silver price if you can time it correctly, and if you want to buy PSLV and then sell your dollars and then use the profits to buy physical, you could do that. But like, why not just buy physical now, and then you'll have your profits when the price of physical goes up with the paper? I mean, unless you're just scared of storing it. I mean,
I think someone just said that there's the minimum, you need 100,000 shares to be able to take delivery, and I think it's 0.36 ounces per share. So yeah, that's the PSLV. Someone's got a question here. Would you mind to answer it? I will send the question in two parts. He hasn't. I thought he was going to ask the questions. Yeah, well, ask us the question and we'll look at it. Let's see. Can the LBMA vaults be emptied by physical demand? Is that the silver vaults? Well, it could, and that's why I think it's really important. It might seem irrelevant that we buy 5 or 10 ounces of silver, but if millions of people start doing that, eventually they will have problems, and the way they can solve that problem is to let the price of silver go up, and then a lot of people some people might sell, and they might get supply. It's the supply and demand always that solves the problem.
Mm-hmm.
Yeah.
Well, that's the problem with SLV, and that once people start demanding the silver and redeeming it from the fund, then if there's a run on it, then you'll figure out if they're double counting or not. Because if more people claim they want their stuff, then silver exists. Then you'll know that's what they've been doing. But we can't prove it yet until that happens.
Yeah, I personally don't trust SLV or GLD because, and PSLV is different because, like you said, is Eric Sprott. But the other ones, they've been created by the bullion banks, and I've noticed that the World Gold Council in the last year or so, they've been pushing a lot GLD. And why would the World Gold Council push GLG? Well, because I think they're in the pockets. World Gold Council is controlled by the central banks. You look at the people that work for them, and they want the public to be in paper gold. So yeah, don't listen. I think they tweet a lot and they advertise a lot. For example, I see a lot of World Gold Council advertisements online. Ignore the World Gold Council. Yes, they talk well about gold, but they really want investors to buy GLD paper, and it's not real gold. The bankers don't like us having physical. I have a story from years ago in Switzerland. I bought some for my mom for her bank, through her bank, big American bank. Uh, and I said, "Oh, I want to buy some gold," and I did. And then I said, "Oh, like 6 months later, I said I want to take delivery," and they said, "Oh, you can't because it's FX gold." So yeah, they hate when people take delivery or of silver. So it would be it's the same thing on comex. It's only last year that they started doing deliveries because of the lockdowns, and people couldn't get gold elsewhere. So they thought, oh, let's try the comex, and the comex had to do it because they would have looked really bad.
Yeah, that's another thing I noticed about the deliveries. I think the record for silver deliveries was in July, right? And that was just before the big spike to the first spike to 30. So I mean, if we're seeing signs of this arbitrage being taken, and the people, the actors on the comex, if I was a gold producer or a gold miner, and I had supply that was coming online maybe in a few months, but I want to take advantage of this premium now. I would as a producer, I would buy futures contracts, get them delivered, and then send the silver to a refiner, and take advantage of my business contacts to do that. So the COTs, the commitment of traders reports on who's short and who's long this coming week, I think they're out on Monday, are going to be very important. The producers should be less short, and that's what we should see if that's what's happening. And we should see heavy deliveries, physical deliveries for the March contract, which is active, if this arbitrage is being taken.
What about, because there's a February contract for silver, isn't there?
Yeah.
And is that people are buying that so they can take delivery right now and then try to arbitrage with the retail?
That could be happening. That has happened in gold from September to January. That did happen in gold. We saw spot contracts being bought and delivered the next day. I haven't checked in silver if that's happening yet, but I think we should see, like, if let's say if silver producers or merchants, they have both long and short positions. Net, they're leaned one way or the other, right? Usually producers are leaned to short because they're going to produce the silver and then sell it to cover. But they do have long contracts. So usually they're both long and short the active contract. That's what they're doing. So rather than roll over to the spot, they'll probably just cover some of their shorts, maybe increase some of their longs, so there'll be less net short, and then just take the delivery of that. That's what they usually do. Whereas I don't know what kind of actor or what kind of trader is buying these spot contracts and then delivering them. I don't know enough about what kind of traders are on the COMEX to know who's doing that, but that has been happening. I just don't think it's going to happen immediately, because there is supply. There is silver supply. It's just not minted into coins right now. It's not like there is no silver. There's no silver that's on the retail level. It has to go through the mint to be produced. But they have the grist. They have the material for it. They just don't have the end product yet.
Yeah. So we've got a super chat here. Thank you, one-eyed rash. He says, my wife loves your sweaters. How many do you own? Also, we love your channel and appreciate Rafi too. Keep stacking, friends. Well, this is actually from Marks and Spencer's, which is no big deal. It's not cashmere or anything. I've got two of these Marks and Spencer's, and I have a few other sweaters. It's just that it's always pretty cold here in the winter, so it's nice. Even though we have the heating on, it's nice to wear a sweater. But I don't know. Maybe I have about 6 or 7 sweaters. I don't know.
Should go on the runway. Should go on the runway.
Yeah. So Bob Hunter, thank you for your super chat as well. Again, he says you can steal my gold or silver, but you'll never steal my freedom. That's right. And I know there's a lot of people that always worry about confiscation of gold and silver. And what I say is, yes, they might do it, but if they're not doing it, I'm still going to try to protect, my savings and what I've been able to accumulate from my efforts, through the years with gold and silver. And the other way I think about, if I'm holding fiat in the bank, I'm actually financing these people. So that's how you have to think about it. Of course, you have to have some fiat in the bank to pay your monthly bills, but I try to keep it to a minimum. What about you, Rafi?
Yeah. I keep my bank accounts to a minimum. I try to keep them as close to zero as possible, just to pay whatever I have to pay, and just keep it out of there. I don't even want to deal with them.
How the Israeli banks, are they very similar to the banks in the US and UK? Do they have insurance guarantees or?
They're much worse. They're a bank in the US, you could actually talk to people. And a bank in Israel, they just, anytime you try to talk to them, they sound annoyed and they don't want to deal with you. And
Is that Bank Lumi? Is that a big bank?
yeah, Bank Leumi is one of the bigger ones.
Yeah.
But they're all a bunch of crooks. And
Gur Olgi, thank you for the super chat. 100 Norwegian kronas. Thank you. He says, what does Rafi see in near future gold and silver price? What does your crystal ball tell you, Rafi?
I don't know. I can tell you what the end game is in terms of how you would calculate it, and in this calculation, and in terms of when this happens, I think the trigger for this, I've said it before, is going to be food prices. When everyone understands that their grocery bills are going way out of control. Other prices don't really matter so much, or especially the CPI. When you take all these unrelated prices and crunch them into a random number, it doesn't really make a difference, because people buy different things and they experience different inflation depending on what they buy. This is Daniel Oliver's calculation. He had a great interview with Kitco the other day. You can look at it on YouTube. He's one of my favorites.
Yeah, I interviewed him. I think the late 2019. And then I was going to interview him again, and then the lockdown started, and he said, "Oh, I'm sorry, I got to leave New York." Yeah, he's good.
Right. He's one of the best, I think, in terms of his grasp of the fundamentals and the technicals. He says that if you take the definition of a dollar or a Federal Reserve note as a liability of the Federal Reserve, right? Then when there is no confidence in a Federal Reserve note, the market will take the gold that is backing the Federal Reserve note, and there is some, and push it up to 100% of the value of the paper on its balance sheet, right? So if the Fed's balance sheet, if the paper is worthless, then the remaining gold on its balance sheet has to compensate in market value for the number of dollar units that are on its balance sheet. So right now the balance sheet is like $7.4 something trillion, and there's 8,132 tons supposedly backing all those dollars in Fort Knox. So if you take one, you divide it by the other. If you take the 7.4 trillion divided by 8,132 tons, then you end up with something around 20,000. But that number is going to keep going up and up and up as they print more and more money. So I mean, theoretically, what could happen is that and I see this as very within the realm of possibility, that gold that people lose confidence in the Federal Reserve, and gold goes up to, let's say, 35,000, and then maybe there's a gold standard and they lop off 3 zeros and they say, oh, we're back to 35. you know, and
Back to $35. Yeah.
yeah,
From 35,000 to
to
three zeros.
35.
Yeah. Yeah.
Yeah, I mean that's what
Yeah.
happens in hyperinflationary
But
economies.
then your deposits also, they go from like $1,000 to $1.
Yeah, unless you have the actual physical stuff, in which case
Yeah.
you're fine.
Yeah.
That's the
Yeah.
point.
Yeah. And what else? Oh yeah, I remember Daniel Oliver, when we did the interview. He did this analysis about the Fed's balance sheet and the gold reserves, and he said that in 1980, actually, when gold went up to almost $900, it was more than 100% backed the
Oh yeah,
dollar.
I think
So
yeah.
yeah, so we could have that happen as well, because they keep things suppressed for so long that when it unwinds, it can go through the level.
Yeah. Well, I mean, we'll know. Basically, we can also use that calculation to know like when you should get out. Like
Yeah,
if you have any paper gold, then at the point where it reaches 80, 90, 100% backing, you should probably sell and get some physical and get out.
yeah.
Because the market is probably going to overshoot. It overshot to about 130% of Fed
Mm,
liabilities in 1980. It'll overshoot again because that's what markets do. They overshoot, they undershoot, and then they find an equilibrium.
yeah.
So yeah.
All right. Let's see if we got some more questions here, and then we'll. Are you okay for time, Rafi, or
Yeah, I'm fine.
fine? The kids are asleep.
Yep, they're asleep.
Rafi's got 5 kids, by the way.
Yeah.
uh, let's see.
Kanai
Kitco did nothing but chat about crypto yesterday. No, okay. We're not going to do that. Uh, let's see. Let's see if there's some more questions here. What is your advice for someone of modest means and education just waking up hearing this for the first time? Do a bit more homework, I would say. Yeah, on gold and silver. Uh, Google research a lot about bullion dealers, about the coins, and then go slowly. I know I think we could see the prices start going up, but right now, for example, you've got a little bit of a chance to buy. Yeah, start slowly. Yeah, what do you think, Rafi? What's your suggestion?
Yeah, I would start with physical silver. Go to a dealer, buy a few coins when there's supply.
Hmm.
Also, just have some extra non-perishable food in your home. I mean, I'm not talking like Armageddonish, like zombie apocalypse or anything. But if there is a food shortage, or there's a serious problem with the pound or whatever currency that you're in, you don't want to be stuck in these bread lines with people who are hungry. I mean, and those are probably coming. There's going to be shortages of stuff. So just so you can stay in your home and have enough food. I mean, it doesn't cost that much to buy some extra rice and put it in some airtight container and just have it. And,
Hmm.
the worst that could happen is it's there, and eventually you'll eat it because it'll be fine. I mean, you got to
Hmm.
get over this taboo of being a prepper and feeling weird about it, and just have it. It's not
Yeah.
that expensive, and it'll save you some trouble.
Yeah. So there's another question here. Do you have any thalers, Maria Teresa thalers? Yeah, I actually do have some of those. They're like kind of the original Spanish dollar. Well, they're similar to the dollar. If you look at a lot of the coins, like the Morgan dollar or the thalers, or even like old Brazilian coins, or like the crown, they're similar in size. The only difference is the country they were made. That was in the day when silver was money. Wow,
Mhm.
it is still money, but it flowed as currency as well. Let's see. Someone says here, I live in the UK like you. How do you see the pound falling in relation to gold when comparing to the dollar falling to gold? Alan, I've always said, and I even wrote something back in 2007 when I was still working in the city, that all fiat currencies are going to sink versus gold. But sometimes they sink slower than others, and sometimes like the pound, for example, since March last year has gone from 115 to like 135 now. So eventually, fiat currencies are a bad hedge against each other, and that's why I think you need to have as little pounds, as little euros, as little dollars or shekels or whatever as possible.
Yeah, it's like building a house on on the edge, like on the slant of a mountain. Like you you're gonna have to be living like on a diagonal for it, but it's not gonna help
Yeah, and it's
in
like
the long term.
the three little pigs who built the house. Only the little pig that built it out of bricks survived, but the other guys, they built it from straw, and I don't know what the other one was, sticks or mud.
Mhm.
Yeah, so fiat currencies are like what the two little pigs that didn't use brick. That's what I equate fiat currencies to. They won't survive. Um, see. Do you think the U.S. government would? What do you think the U.S. government would? Do you think the U.S. government hmm, would do ever put a floor under metals price? Do you have any thoughts on how that might play afterwards? Yeah, what they might do, like Rafi was talking about, $35,000 gold. What I and then the Federal Reserve note would be toast. So they'd have to bring in a new system, and they'd have to have gold behind it. They could lop off 3 zeros, or they could lop off, let's say, 1 zero, and take the gold price back to 3,500, and then they would say that they're going to keep the gold price between like they'd have like a corridor, like during the European, before the euro, they had the ECU, European currency units, and they had what they called the snake, and they keep each currency versus the Deutschmark in a corridor, so they could have gold at 3,500, and then 2% below, if gold went 2% below that price, they'd start buying gold. And if it went 2% above, they start selling. So I think that's something they could do.
I mean, they could. I mean, that's a theoretical mechanism, but in order to be able to do that credibly, you'd have to the United States government would have to cut spending so drastically that it would cause riots among most of the population. I mean, did you see what Mitt Romney proposed to Congress today? It was like something like $3,600 a child,
I heard that,
per
yeah.
year. Nothing can surprise me any. I have 5 kids. I'd be getting like $17,000 a year. Why
Yeah.
why not $1 million? Why not
Yeah.
$1 trillion? Like, what's the difference?
I was talking to Rethinking the Dollar, Mike from Rethinking the Dollar. He told me about that, and I said, well, that's going to give a lot of incentive for people to have more children. So if you have 10 children, you're going to get $36,000 a year for having children.
Yeah, but it takes 9 months it takes 9
Yeah, I
months to
know.
cook a baby. We don't have that much time, I don't think.
It's a one-off, is it?
No, is it? No, it's his proposal is per year, $3,600
Oh,
per year. But like,
you'd be happy with that. You'd be buying silver with that, wouldn't you?
yeah, I already bought some
Now you're
with my Trump money.
Yeah. So we got another question here. Thank you, Evan Spellman, for your super chat. Super explanation on backwardation. Much appreciated. I trust Eric's brought as well. Big PSLV position for some time. Also stacking silver. Thank you for your interview, Mario. All the best. Oh, you're welcome. And thank you very much, Evan.
Well,
Okay, let's see here. Oh, someone said that you need to get a Billy Airways sweatshirt because, Billy the dog, when they're bailing out the airways, I said, well, Billy, doesn't like bailouts. He's going to start his own airways. So we have a Billy Airways, but thank you, Bob Hunter, again for your super chat. So yeah, we're gonna call it a night here because it's getting late, and we've been on for an hour. So Rafi, do you have any final thoughts for the viewers?
Final thought. Well, we can make it lighthearted. You're talking about your dog. I mean, I've got 4 chickens in my backyard, and they're all laying. So I got like 4 eggs coming in every day. That's another thing you could do if you've got some land. That's another very useful thing to do. Build a chicken coop, get some chickens. You'll get some eggs. You won't have to be in an egg line. Plant a garden in your backyard. You're on lockdown. Do something with your hands. Get moving. If you're starting out, make sure you have some food supply. And gold and silver, gold and silver for trading for stuff. But you can also have the actual stuff. Make your life easier for what is coming, because it is coming, and it's coming soon.
Yeah, thank you, Rafi. Just before I close off, I heard something that food prices have gone up the most in a long time in the last few months. So yeah, that's good advice. Maybe I should think about that, because I do have a garden, but the only animal we have here is Billy, and I don't think he's going to lay any eggs soon. But he is a silver bug, so that's great. So everyone, thank you for coming along to this live stream. I'm still doing my Sunday live stream. This was just a special one. I'm getting more used to doing the Zoom and having guests. And I read Rafi's piece today about backwardation, and I thought it would be interesting for you guys to hear about it. So thank you, everyone, and take care. Thank you, Rafi.
You're welcome. Good talking with you, Mario.
Nice talking with you as well. Let's see.